Hello everyone, welcome to EduTap and welcome to today's session. So today we are going to discuss two very important notifications that has been released by the Reserve Bank of India for the urban cooperative banks. So the RBI has decided to extend the timeline for the urban cooperative banks to achieve the priority sector lending targets. So what are these targets? Why the RBI has provided the extension of the timeline? All of this we are going to discuss in today's session, as well as the second notification of the RBI is regarding the urban cooperative banks that can now open the new branches without the prior approval of RBI if they are following the set criteria. So what is that set criteria? So all of this we are going to discuss in today's session. And before starting with the session, do subscribe to our YouTube channel and join our Telegram channel for the PDF of this session. So you will get the PDF of this session in the Telegram channel. Now starting with the news article, first of all, the RBI, the Reserve Bank of India, has given the urban cooperative banks the extension of 2 years timeline. So the 2 years extra has been given by the RBI to the urban cooperative banks to achieve the priority sector lending targets. Okay, so the banks have the target to lend to the priority sectors, and these are the priority sectors that has been categorized. So the priority sectors in India are the agriculture sector, the MSMEs, export credit, education, housing, renewable energy and social infrastructure. So the banks, different banks have different targets that they have to achieve, that they have to lend to the priority sector. So let's say the scheduled commercial banks, I hope you remember that the scheduled commercial bank has the target of 40% of their adjusted net bank credit that they have to lend to the priority sectors. Adjusted net bank credit, now you do not have to get in depth of this because this is not required from the examination point of view. Just remember that the adjusted net bank credit. So the net bank credit is the total bank credit that is given by the bank minus the rediscounted bills. Minus the rediscounted bills with the Reserve Bank of India and the other approved financial institutions. Okay, so I hope you all know that the banks are discounting the bill invoices that the seller has sold the material to the buyer. And let's say the buyer is saying that I will pay after 3 months. So the buyer has to pay 1 lakh rupees, which the buyer will pay after 3 months. But the seller is in need of the money right now. So the seller will go with this bill invoice to the bank and the seller will say that, okay, give me the money and you can take the money from the buyer after 3 months. So the bank will give the seller, let's say 90,000 rupees. And after 3 months, the bank will get from the buyer 1 lakh rupees. So in this way, the banks are discounting the bills of the sellers. But now the bank is in the need of the money. The bank is in the liquidity crunch. The bank requires the money. So the bank has rediscounted the bills with the Reserve Bank of India or with the other approved financial institutions, and the banks are selling. The bank is selling the bill invoices or the bills. Banks are rediscounting the bills with the RBI or the other approved financial institutions. That means this much money the bank has got, the bank has received from the the bank has received back. So that's why from the credit, that is the money that has gone out of the banks, from this we are deducting the rediscounted bills. So this is the net bank credit. Adjusted net bank credit. Adjusted means the total investment that has been made by the banks in the bonds, in the non-statutory liquidity ratio securities, so non-SLR securities. So all the investment that has been done by the banks in the bonds, non-SLR securities and the other kind of securities. So actually A and BC, you can see A and BC is the net bank credit plus all the investment. So it is actually what? It is actually the total amount of money that the bank is giving out, or the money on which the bank is earning something. So this is the total money that is being given by the banks, that is being used by the banks. So from the total money that is being used by the bank, the scheduled commercial banks have to give 40% to the priority sector in the lending form, and the regional rural banks have to give 75% of the money that is going out, that is 75% of the adjusted net bank credit. The RRBs have to give to priority sector. Okay, that is the regional rural banks have to do 75% of the adjusted net bank credit, has to lend 75% of the adjusted net bank credit to the priority sectors. And the small finance banks also have to lend 75% of their adjusted net bank credit to the priority sector. So this was the complete understanding. Now the urban cooperative banks have got the 2-year extension for achieving their priority sector lending targets. Now we will understand that what were the prior targets and what are the new targets. But before that, why the extension has been given? Because the urban cooperative banks, they were facing the implementation challenges, and that's why the RBI has to give the extension. The primary urban cooperative banks, they have to follow these rules other than the salary earner banks. So salary earner bank are the urban cooperative banks that are like the salary earners of the government institutions or the salary earner of the public sector enterprises, the public sector units. So the salary earners are coming together and they are making a thrift society kind of thing. They are saving their money. So those kind of salary earner banks are not, they do not have to maintain this kind of targets. Okay, so all the primary urban cooperative banks other than the salary earner banks, they have to follow these targets. So why the extension? Like we have understood that okay, they were facing implementation challenges, and that's why RBI has to provide the extension. But what was regarding the target? Why they have to be given the extension? Okay, why they were facing the implementation challenges? So in 2020, the RBI released a notification that the urban cooperative banks, they are maintaining 40%, they are providing 40% of their adjusted net bank credit for the priority sector. From 2024, they have to start providing 75% of their adjusted net bank credit to the priority sector. So this was the target enhancement that was done by the RBI in regards to the urban cooperative banks. So this was the order that was given to the urban cooperative banks that from March 31st, 2024, that is for 2023-24, from this financial year, you have to start providing 75% of your adjusted net bank credit for the priority sector. And for the non-disruptive transition, a glide path, a phased path has been provided to the urban cooperative banks. Okay, but there were the implementation challenges that were faced by the urban cooperative banks. So this was the old timeline that was provided to the urban cooperative banks. That is in 2020, 2021. In this financial institution, in this financial year, they have to maintain 45%. So before that, they were maintaining 40% of the A and BC. They were using 40% of their A and BC to lend to the priority sector. From 2020-2021, for this financial year that is ending on March 31st, 2021, for this financial year, they have to provide 45% of their A and BC to the priority sector. For 2021-22, for this financial year, 50% of their A and BC should be provided to the priority sector, should be lent to the priority sector. For this financial year that is ending on March 31st, 2022. For the financial year 2022-23 that is ending on March 31st, 2023, 60% of the A and BC of the adjusted net bank credit has to be provided to the priority sector, and by March 2024 they have to meet the target of the 75% of the A and BC that should be provided to the priority sector. And in this total target, there are also the sub targets that has to be met. That is for the weaker sections, the urban cooperative banks for the 2020-2021, that is for financial year 21. The urban cooperative banks have to maintain 10% of the A and BC. They have to provide 10% of their A and BC to the weaker sections. Okay, that is they have to lend 10% of their A and BC to the weaker section under this total 45%. Okay, in financial year 2022, under this 50% of the total target, 11% of the A and BC has to be provided, has to be lent to the weaker section. Now coming to the 2024 financial year 24. In this year, under the 75% of the complete target, the sub target is to provide 12% of the A and BC of the lending to the weaker section. Okay, so this was the concept that was provided, that by 2024 you have to achieve the target. But now there were problems that were faced by the urban cooperative banks. They were not able to transition very smoothly. They were not able to maintain the complete amount by 2024, and so like they are not able to maintain that much target na. So the RBI has said that okay, we are going to extend the timeline, and the new timelines have been provided that in the 2023-24, in this financial year, that is the financial year 24, for this financial year 60% of the ANBC has, of the total money that is going out, you can remember it like this, 60% has to be lent to the priority sector. By 2025, financial year 25, financial year 26, by financial year 25, 65%. So that is in 2024-25, 65% of the ANBC has to be lent to the priority sector, and financial year 26, that is 2025-26, for this financial year 75% of the ANBC has to be lent to the priority sector. And these are the sub targets, these are the this is the phased part that has been provided for the sub target for the advances to the weaker section. Okay, the sub target, the PSL sub target for the micro enterprises, it has remained 7.5% of the ANBC that has to be provided to the micro enterprises, and this has been effective from 2018. Okay, now here the small and marginal farmers, the urban cooperative banks do not have to meet the sub target for the small and marginal farmers, because they are the urban cooperative banks, so they are not they are only managing the targets for the urban areas. Okay, so the small and marginal farmers, this sub target they do not have to maintain. Urban cooperative banks do not have to maintain. The PSL achievement is determined at the end of the financial year, that is based on the average of the 4 quarters, that in the 4 quarters, at the end of the each quarter, the priority sector target that has been achieved. So in this quarter, the priority sector lending target that was achieved in this quarter, in the next quarter the priority sector lending target, in the next quarter what is the priority sector lending target, and in all the quarters, in a year there are 4 quarters, so in all the 4 quarters what is the priority sector lending target and the sub target that has been achieved, of that the average is taken, and through this the PSL achievement is determined at the end of the financial year. You can understand this. Okay, now coming to the non-achievement, that if urban cooperative banks, because the urban cooperative banks were in the transitioning phase, so it was said by the RBI that okay, if the urban cooperative banks are not able to maintain their target, like for 2020-21 they had to maintain 45%, they had to achieve 45% of the ANBC, they have to provide this much to the priority sector in the 2020-21. But if they were not able to achieve this much of the target, then they were advised to contribute to the RIDF fund, to the Rural Infrastructure Development Fund that is established with NABARD, and they can contribute in the other funds that is maintained with NABARD, NHB, SEBI, Mudra Limited. So against their PSL shortfall, so they were maintaining 40% before the transitioning started. So 40% of the ANBC, they were providing this much lending to the priority sectors. Now by 2020-21 they had to start providing 45% of the ANBC to the priority sector. So if they are doing any shortfall, if they are only maintaining 42%, so these 3%, that is the shortfall that has happened of the ANBC, so this much has to be contributed to the RIDF that is maintained with NABARD or the other funds. Okay, so in this also there is the relaxation that has been given in view of the implementation challenges. The RBI has said that the urban cooperative banks would not be required to contribute to RIDF or other eligible funds for the shortfall that has happened in the PSL, in achieving of the PSL target or sub target during the 2020-21 and the 21-22. So if there is any shortfall that has happened in those 2 years, then the UCBs do not have to contribute to the RIDF the shortfall amount. Also, in case if they have already contributed in the 2020-21 and the let's say financial year 21 and in the financial year 22, if they have already contributed the amount for the shortfall, then this amount will be utilized to cater to the shortfall that they have done in the financial year 23, that is financial year 2022-23. So in this year the shortfall that has happened, so this amount that was deposited by the urban cooperative banks to cater to the shortfall of the financial year 21 and the financial year 22. So this amount will be utilized to cater to the shortfall that has happened in financial year 23. Okay, because urban cooperative banks have to contribute to the RIDF and the other eligible funds if they have done any shortfall for the 2022-23, that is the financial year ending in the March 31st, 2023. So the relaxation has been given for the 2 years, that if in these 2 years the shortfall was done, then there is no need to contribute. But if in this year there is any shortfall, then the urban cooperative banks have to contribute the percentage that has been shortfalled. So in this year, like the money that has already been deposited in the previous 2 years of the financial year, in the previous financial years, the contribution that has been made, that will be utilized to cater to the shortfall that has happened in the financial year 23, and the excess deposit, if any, this will be offsetting the shortfall that will happen, that has happened in the financial year 2022-23, and the excess deposit will be refunded. So the deposit will be used to offset, and after that whatever is the excess deposit, that will be refunded. Okay. So now rationalization of the branch authorization policy for urban cooperative banks, it has been said by the RBI that to tap growth opportunities in the sector, to provide the easier way for the urban cooperative banks to open the new branches, the RBI has provided a new system, that is the general permission system, or we can say the automatic route, through which the urban cooperative banks, which are the financially sound and well managed urban cooperative banks, they can open the new branches without permission of the RBI. So what is this method? First of all, what is the financially sound and well managed? So the urban cooperative banks that have the capital adequacy ratio. So the urban cooperative banks that have the capital adequacy ratio, let's say it is 9%. So the tier 1 urban cooperative banks have to maintain capital adequacy ratio of 9%, and the tier 2 to tier 4 have to maintain capital adequacy ratio of 12%. So if they are maintaining plus 1%, then the percentage that they have to maintain, they will, like one of the criteria they will be fulfilling. Now the capital adequacy ratio, or the capital to risk weighted asset ratio, what does this mean? This means that the assets, that is the loan of the banks, they have the risk attached. They have the risk attached. So, and different loans have different risk attached. Okay, because different people are differently risky. So the government is less risky if the government is taking the loan. The MSMEs are considered more risky. So the asset, that is the loan, have different weight attached as per the risk that is attached. So risk weighted assets from this, like the loans that is being given, the risk weighted loans that is being given from the, a percentage of the capital has to be maintained against the risk weighted asset. Okay, so for the tier 1, 9% is the capital adequacy ratio that the tier 1 UCBs have to maintain, and if they are maintaining 1% extra of the minimum CRAR, then they can consider, then they can come under the FSWM. Net NPA, net non-performing asset, should not be more than 3%. Net profit for at least 3 out of the preceding 4 years. So in 3 years they should be getting the net profit, especially they should not have incurred net loss in the immediate preceding year. So out of 4 years, 3 years they should be getting the profits, and the immediate preceding year they should not have faced the net loss. No default should happen in the cash reserve ratio and the statutory liquidity ratio in the preceding financial year. They should have good internal control system with at least 2 professional directors on the board. Core banking solution, that is connecting different branches of the bank, that should be fully implemented. No monetary penalty should be there on the urban cooperative bank in case of the violation. Okay, so if the RBI is putting any monetary penalty, that means they have violated, the UCB has violated some criteria of RBI. So that should not happen. If they are following all of these criteria, then they will be considered financially sound and well managed. So the financially sound and well managed urban cooperative banks in all the tiers except the salary earner banks. So leaving that, all the other urban cooperative banks, if any of the bank is financially sound and well managed, they will be provided the general permission of the branch expansion, that is in their approved area of operation. They will not need the prior approval of the RBI to open new branches. Okay, so the eligible FSWM UCBs shall put in place a board approved policy for opening the branches. They will not require the RBI's approval. The policy should be formulated keeping in mind the financial health of the bank, the viability study of the new branches, that the urban cooperative banks is viable to open the new branches, they have the manpower, they have that much capacity or not, and customer service and must be updated periodically. The board approved policy should be updated periodically to keep it aligned with the revised RBI guidelines. The eligible urban cooperative banks are permitted to open new branches up to 10%. So let's say urban cooperative banks has 40 branches in the previous financial year. So 10% of this is 4 new branches they can open. If they have 90 branches in the previous financial year, 10% of this will be 9 new branches, but the maximum limit is of 5 branches in a year without having the need to take permission from the RBI. So 10% new branches, 10% of the previous financial year, the branches that were available in the previous financial year. So the limit is 10% of the branches that were available in the previous financial year, that also maximum up to 5 branches. Maximum up to 5 branches without having the need to take the permission of RBI. This much the urban cooperative banks that is financially sound and well managed can open. Okay. If the total number of full-fledged branches are less than 10, so let's say it is 9. So 10% of 9 is what? 10% of 9 is what? It is 0.9. So 0.9 is no branch, or 0.3 or 0.4 is like no branch. So the bank will be eligible to open at least 1 branch. The minimum is 1 branch. So if the bank is FSWM UCB, Urban Cooperative Bank, and they have like less than 10 branches at the end of the previous financial year, so they can open at least 1 branch. Further, the urban cooperative banks, they need to have the proposal for opening of such branches. That is the policy that is approved by the board of directors. That is board approved policy they should happen for opening the new branches. It is clarified that the bank has the liberty to open a new branch or to upgrade the extension counter. Now the extension counter is the counter of the bank, that is a small place of the bank, we can say, that is providing the basic banking services like the deposit and withdrawal. So this extension counter, if it has been operating for more than 3 years, this extension counter can be expanded to upgrade it to become a new branch. This can become a new branch if it has been working for 3 years under the general permission criteria, and the bank branch, they can do all the banking services like the deposit, withdrawal, loan, and any kind of scheme that has to be opened through the bank. So all that could happen through the bank branch. So the urban cooperative bank can open the new branch, or they can upgrade the extension counter to make it the full-fledged branch. Okay, within the overall limit of 10% of the branches that were available at the end of the previous financial year, that is up to the maximum of 5 branches. So the urban cooperative banks that are maintaining the financially sound and well managed criteria, they can open the new branches up to 10% of the number of branches that were available in the previous financial year, maximum 5 branches, without the prior approval of the RBI in their approved area of operation. Urban cooperative banks have to have the board approved policy that should comply with the financially sound and well managed norms. Okay, then only they can open the new branches in the general permission category. So this was all regarding the 2 notifications of the Reserve Bank of India. This is the first question, that is the extension of the time has been provided for the achieving of the priority sector lending target. You have to tell the extension is up to what time. Next question is regarding the RIDF fund, that is established by which organization, that you have to tell. Next question is general permission of the branch expansion in the approved area of operation is provided to the urban cooperative banks. You have to tell that as per the financially sound and well managed revised criteria, the urban cooperative banks should not have a net NPA of more than what percentage. So this was all. Now there is a big announcement from EduTap that we have brought for you the comprehensive guide for RBI, NABARD and SEBI. So through a single guidebook you can get the complete syllabus for the RBI Grade B examination, for the NABARD Grade A examination, and for the SEBI Grade A examination, as well as you can get the sources for the preparation also, as well as we are providing you in this single guidebook, we are providing you the previous year questions also that you can use to get more knowledge about the examination. and to enhance your level of the preparation. So do download these guidebooks. They are provided in the description box below. The link is provided in the description box below. Do download these guidebooks, and thank you very much. If you have any query, you can mail us here or you can contact us through this number. Thank you very much, everyone.